We got the Bitcoin ETF, which is going to be approved. BlackRock's going to get approved. And whether anyone else gets approved, I don't know. I'll take the under, but hopefully, I own pieces of 21 shares and Bitwise. I hope both of them get approved and fully reserve them at the central bank.
Yeah.
Wow. I mean, that's big. So that means Tether ain't going to qualify for that.
The future of Bitcoin continues to hold promise, despite looming challenges from regulators and potential government intervention. So, what drives this anticipated growth? Now, despite regulatory uncertainties and talks of potential government control, the crypto landscape is poised for significant growth. The year 2024 will mark a turning point for Bitcoin. We are seeing remarkable growth and adoption. But what's coming next will be truly face-melting. Mark Yusko, CEO and CIO at Morgan Creek Capital Management and a prominent figure in the finance industry, has made some jaw-dropping predictions about Bitcoin and the broader crypto space. According to Yusko, increasing institutional adoption will play a pivotal role in driving the value of cryptocurrencies. Major financial institutions and corporations will continue to allocate significant capital to Bitcoin as a hedge against inflation and a store of value. Let's see what Mark Yusko predicts about Bitcoin. Crypto market dynamics.
So the good news is digital assets in the stock market aren't correlated at all, right? They actually went to negative correlation here recently. And the long-term correlation of let's just take Bitcoin to the S&P is 0.15. And it had one small period during the liquidations in 2020 when it went up, but that's the nature of liquidations, right? You don't get to sell what you want to sell, you sell what you can sell. And so all correlations go to 1 during liquidations of margin. So we're back to a period of low, I won't say negative, but low correlation. And so look, I think stocks are going to struggle. I think this rally probably goes longer than people think, but then they're going to have to pay the piper, and they're just pulling forward future demand. And I think next year is going to be meaningfully tougher. But that said, I'm really excited about what's about to happen in the digital asset space because of supply and demand. Yeah. Right? We got the Bitcoin ETF, which is going to be approved. BlackRock's going to get approved, and whether anyone else gets approved, I don't know. I'll take the under, but hopefully, I own pieces of 21 shares and Bitwise. I hope both of them get approved. They're both ahead of BlackRock in line, but I'm a betting man, and I would bet both of them get denied, and BlackRock gets approved. That approval is going to unlock $30 trillion of assets.
Bitcoin price predictions.
Ethereum's been rallying, still lagging Bitcoin, but it's been rallying. And ultimately, the halving cycle is destiny, right? When the halving cycle occurs, and the halving occurs next April, the block rewards get cut in half for Bitcoin, and the price of Bitcoin basically has to double. Right. So, why does it have to double? Well, if it didn't, then the miners would all go out of business, and we can't have the miners all go out of business. So it's kind of a built-in mechanism for increasing the price. Well, why does that matter? Well, an increasing price attracts activity, attracts notice. And so the more money that gets converted from fiat into Bitcoin, then some of it trickles down to the other parts of the ecosystem. And it's, rising tide lifts all boats. Yep. So a fair value of BTC today, somewhere in the low 50s, according to the, Tim Peterson model, based on Metcalfe's law, which I think is the best model out there. Let's round it to 50 to be conservative. That doubles to 100 in April, May next year. We shoot right through fair value in these, crypto falls. That we're in crypto summer now till next June. Then we go to crypto fall from June to June following the halving. Then we go to another crypto winter, but that's a long time from now. But in crypto fall, on average, we've rallied about 2.5 times fair value. I don't think that happens this time. I think partly the law of large numbers, partly not as much leverage in the system. So, do we get 1.5, 1.75, 150, 175, maybe we could get to 200K. I'm going to take the 150 number. Seems like a logical place for us to be sometime in 2024. We likely, or fall 2025. Logic would say we get too high and then we correct. And why do we get too high? Because the speculators come in and the gamblers come in and people lever. But if there's not as much leverage this time, then maybe you don't correct as much. But ultimately, we'll go to excess and we'll need to correct. How much we have to correct, I think, depends on a lot of things. Look, if the big boys are here and have decided that, choke point 2.0 really didn't work, they tried to kill it. The thing is, you can't kill the technology.
Right.
You can delay the adoption by, making the on-ramps and off-ramps difficult, or trying to legislate your way to make it challenging for businesses. But at the end of the day, name a technology that a better one came along and it survived, right? Technology is evolving, and digital technology is here to stay, and blockchains replace trust with truth. Truth is better than trust. And the banking industry has relied on trust for 800 years. They've had a good run. It's coming to an end. It won't end tomorrow, but ultimately, we can all be our own bank. We can own our own assets. We can own our own identity, our sovereignty. And we can actually, look, the key word in the white paper is peer-to-peer, right? Hyphenated. Or 3 words, if you want to call it 3 words, or 2 words, peer-to-peer. But the reality is that's the key. What does that mean? It just means that I can send you value without an intermediary.
Right.
Right now, you have to have a bank account. I have to have a bank account. I send you a wire or a Venmo or something. And that's the funny thing about fintech. There's no tech, right? It's just a UI UX. And it's not a web transaction, because I send it to you electronically using an app, but that's web too, Mark. Well, yeah, but then it leaves the web and goes into the banking system.
Yep.
That is not native. That is not digital. Yep. So what's going to happen in Web3 is we're going to have native currencies, Bitcoin and others, that will never leave the web. That transaction that you and I do will stay resident. Or I'll be in my car being driven, because we won't drive, and it'll pull into the charging station. I won't get out of the car and put a card in a slot and have it literally use a phone line or an internet line to call a bank and approve the charge.
Right.
That will not happen. The car will access a wallet and pay the machine. That will all happen on chain, on the web.
Instant.
And that Web3 ecosystem, and all I'm really doing here is I'm just quoting this amazing book called The Spatial Web, where they outline this whole system that Web 1 and Web 2 are 2-dimensional. Web 3 is 3-dimensional. And that three-dimensionality means we can stay in the web space and interact and engage in commerce, and we don't need to go back out into the old world. Or as I said, fintech is 25 years of no tech.
Bitcoin and Ethereum spot ETF approval.
Do they push it one more time and go right down to the wire? I think the Ides of March. I think March 15th is the drop dead date. They either have to deny them or they are deemed effective. And I think there's zero chance, when you should never say zero, but I think there's zero chance that BlackRock doesn't get approved. And so does it happen on the January 15th date, or do they wait till the March 15th date? I don't really know. I don't have any insight. But in both cases, it's before the halving, and you put that event in front of the halving. Ooh, fireworks, baby. I mean, look, we went from 10 to 60 in a matter of months, when GBTC was buying in the last cycle and Saylor came on and Elon was talking about maybe you could buy a Tesla with it. And then he changed his mind and went from 60 down to 30. And then Saylor bought more, and then we went back to 69. But that first pump from 10 to 60, when fair value was only 30, I mean, that was almost instantaneous. I mean, it was that same old. Everybody went home for Thanksgiving. They talked about it. People bought some more. Saylor came on TV. GBTC started pumping. I think $5 or $6 billion went in at a time when that market cap was much lower, and the rest is history. So is this one going to be bigger than that? Yeah, but we're starting with a bigger number. So the law of large numbers is hard, right? It's tougher to double a $700 billion asset than it is a $150 billion asset. Just is. The knock against them is the same. Quote unquote, the markets can be manipulated, blah, 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 blah. No, it really has to do with the fact that the big banks love the fact that the futures ETF allows them to go naked short.
Yeah.
Right? And that's why we had this tremendous bear market. I mean, you go back to almost the exact day of the launch of the futures ETF was the top of the market in 21. And look, if people can go naked short, they can manipulate the price. It's been happening in gold forever. Anytime you can create a paper asset with a futures contract, you have the opportunity to manipulate. So I will argue that commodities markets are more manipulated than Bitcoin market. And there are a lot of commodities ETFs. The VIX, oh my God, the VIX futures, I mean, that is a license to just rob people of their wealth. But that got approved, and it's got billions of dollars in it. So plenty of triple levered ETFs, which are horrible. Just the way they even calculate the rebalancing just robs people of their money. And yet those got approved. So something like a Bitcoin spot ETF or an Ethereum spot ETF, both of which allow you to actually own the physical asset. How could you not want that to happen? And the reason is because by approving it, you're acknowledging that it's real. And the big banks don't want us to acknowledge that it's real yet. And look, we saw the announcement this morning that JP Morgan has got this new private chain to help asset management companies, eliminate back office infrastructure expense and lower fees. Okay, great, but it's still a private chain. And it lacks all the benefits of, all the things we want in a decentralized world. And they made a big announcement and they're patting themselves on the back and that's all great. But decentralized is better than centralized. And a decentralized future is where we are headed, but not without a fight. So do I expect all the big banks to roll over? Do I expect them not to try to create regulation to slow it down? Like, the thing I am afraid of is the ETF gets approved, a bunch of money flows into it, they sop up all the excess Bitcoin, and then they say, you know what? Just like 1933, we're doing executive order. It won't be 6102 this time, but some number. It's illegal to self-custody Bitcoin. Now, people say, you could never do that. Oh, sure they could. Yeah. Just like they did it with gold, right? It was illegal in the United States from 1933 to 1975 to own gold as a citizen. Did plenty of people own it? Sure. Did everyone give it up to the government? No. Were they technically criminals? Yes. Could they have come into your house and taken your stuff? Yes. But the average person doesn't own enough that they're going to do that. But the big dogs, they might be targets. And I do worry about that. I don't think it's necessarily going to happen, but it is a scenario that if I were devising Operation Choke Point, I would do exactly what they did, right? I would bankrupt the lenders, right? The people who were allowing people to convert fiat to digital, so the on-ramps. They did that really well. through regulation and being in cahoots with FTX, which I think they were. And I shouldn't say that out loud, but oh well. Issue a stablecoin, you've got to deposit the assets and fully reserve them at the central bank.
Yeah.
Wow. I mean, that's big. So that means Tether ain't going to qualify for that.
As we navigate the exciting possibilities of Bitcoin's projected surge to $100,000 and the intricate web of economic dynamics, it is clear that both crypto enthusiasts and traditional investors are in for an eventful period. The road ahead is a blend of optimism and caution. While Bitcoin's potential rise excites many, the underlying economic indicators hint at a complex narrative that demands attention. Remember to stay informed, engage in discussions, and consider diverse viewpoints as we navigate the evolving realms of cryptocurrencies and traditional finance. Don't forget to like, share, and subscribe for more insights into the exciting world of finance and cryptocurrencies. Until next time.